So you worked from BlackRock from between 2018 and 2019 as the Chief Investment Officer for Sustainable Investing at a time when BlackRock was preparing to announce a major shift in strategy. Could you tell us a bit about your experience there?
Yeah, definitely. And to clarify up top, that's right. The exact dates are, I got recruited and approached to join them in late 2017. Joined and began, I was supposed to begin at the end of December. There was a bit of delay, so it was January 2018. And then in March 2019, I told them that I had to leave because of family business you have to take care of. And then I did a 6-month transition. So I left finally in September 2019. Mm-hmm. And so, my responsibilities there were, as Chief Investment Officer, mainly around both integrating, environmental, social, and governance considerations into all of our investing processes globally. So that's the overall, like the 8.7 trillion, or all the existing machine, of which the majority is passive, and then there's a lot of active. It's like BlackRock's so big, it's sort of a microcosm of capitalism in a lot of ways. It has different strategies. And so that's across the entire asset base, and that was a specific task to the Chief Investment Officer. And then there was two of us. There was a head of sustainable investing, Chief Investment Officer. Then we also worked on new products. So new products would be like, if you think of the 8.7 trillion of BlackRock's overall thing, there's a new and growing category of like ESG or green products. I think at the time I was there, we started measuring it as like 50 billion or something. I don't know. I don't know what the public numbers. I thought I saw them publicly say it's 200 now. So it's obviously growing like much faster than everything else. And so if you think about it, it's really like greening the entire machine and all of their processes, as well with the guise of saying like this is good for investing returns, right? And then saying, hey, we're also going to build a bunch of new products that actively lean into the ESG or green angle, with the idea that like they can, create, you can get the return and like create measurable impact against the environmental and social goals.
So you've been very critical about sustainable investment practices and ESGs. Earlier this month for USA Today, you wrote, sustainable investing boils down to little more than marketing hype, PR spin, and disingenuous promises from the investment community. Could you expand a bit on that?
Yeah, so, in general, people believe they believe that all of this work that Wall Street is doing is creating social impact. Like they believe that it's both intended to and should, in theory, be creating some positive change for the real world around us. The reality is that the majority of the products that have a vast majority, there's no demonstrable impact on anything. And when I say demonstrable impact, usually when people talk about impact measurement, they talk about a principle called additionality. Additionality is really just the idea that, by doing this, something additional is being created that otherwise would not have been created, right? So if you invest in an ESG fund, like something better will happen from the world because you've now done that. In reality, behind the scenes, the mechanics of how the secondary public markets work, I won't get too jargony unless you want me to get too much details, but it really, you don't do anything. You're just basically, they're just moving shares around and saying, okay, well, you have certain values, right? Because, you care about making the world a better place in addition to investing capital. And so they're allowing you to put your money behind, like less behind fossil fuel players and a bit more behind green companies. But the way share trading or the markets work, it almost doesn't matter, because as long as the companies that are not doing good things, right, like fossil fuel or whatever, as long as they can still reap profit out of what they're doing, they're always going to find money financing. Right? It doesn't matter the fact that you and I decide not to invest in them, whether we divest of it, which is the early days of sustainable investing, or we do now what they have with most of their products, which are just what I call soft investment. So they don't actually remove the fossil fuels entirely, but they say they're going to tilt, 10 or 20% lower than the measurable index that otherwise the market index would be using. So you get a lower carbon footprint and you own less fossil fuel makers. Any of us feel nice about that because we don't feel like contributing to climate change. It doesn't do anything because, like, frankly, if you and I stop owning it, it's like divestment. If we stop owning an oil company, it doesn't do anything. It still sits there and does whatever they're doing, and they still make profit, and they'll still find 20 hedge funds will buy their stock. Most of the products that are now being sold are just variations on that theme. They tilt in a certain direction, but they don't create, and this is the thing, there's not 1 ounce of evidence, and I use from internally, that this creates any kind of measurable social impact against, pressing goals that we need to address as a society. And the reason that I decided to speak out about it was because after I left, I noticed the marketing had reached such like crazy levels because it was rush, because no one's regulating what's green and what's not, whether it's the financial products that we buy or stuff on the shelves. So this is gold rush because everybody knows that you can just put green labels on stuff and then it'll sell. And so the incentive without any regulation or any referee sort of or independent observer, which always has to be government, the incentive is just to do the least amount you can to change your existing process, whether it's investment processes or real economy companies building stuff, right? You do the least you can to change that while getting the green label, right? And then, stuff flies off the shelves because consumers, we all don't know any better. We don't know if it's really green or not behind, and no one's regulating what they're saying. And so that you just have this whole thing where everyone goes and they spend their money on it. And my concern around that is it's bigger than the financial system. It's that really it creates a massive societal placebo, right? Because everybody thinks that they're doing something good. That they said Wall Street's got this, right? And nothing that Wall Street is doing is actually creating any impact. And even as an example, I'll give you an example. You've probably heard a lot about climate risks, right? People talk about climate risks in the financial system. Business needs to understand climate as a risk. We, BlackRock, taught you about climate risk. And it's like, honestly, this is why I started, so the part of that I'll tell you, I started working at university or understand public attitudes, because I started realizing that the work that I was doing is being so exaggerated that at some point it goes from aspirational to being really just misleading. And it delays, it causes, it lulls us into complacency, and then we wait a few years and we really can't wait a few years. And so one of the areas is the greenhouse climate risk, because everybody talks about it. And I realized and found in the work I was doing here that the majority of the public, they hear about that and they think that we're trying to mitigate climate change. We're trying to stop climate change from happening. The reality is all they're talking about is protecting investment portfolios from the carnage, right? They're not actually they're talking about stopping the carnage. And so to give you an example, we put out a report 2 years ago that said that new data sets allow you to understand that the damage of climate change at a very localized level. So it's not just the US gets hit, but it's where. And so it shows that Miami is going to get hammered, right? Because of extreme weather conditions. But North Dakota, actually you'll see a GDP growth, right? A slight growth, because temperate regions actually benefit. Overall, the whole US, gets hammered, right? And it's kind of COVID, right? A few companies do well, Zoom and, whatever, certain places, but overall, it's clearly terrible. And so really climate risk, we found that Miami gets hammered, and other places are okay. And you realize the public hears about that, and they don't realize that people in Miami probably think we're trying to this is helping to fight climate change and save their city. Reality is we're talking about selling or getting our money out before it hits. You know what I mean? It's literally, it's let's sell our real estate in Miami and move it to a place not going to get hit. And so all of it is around adaptation. Adaptation, whether it's your investment portfolio, make sure that you're not going to get hammered by extreme weather conditions, or it's adaptation in terms of building your model around a world like that. And that doesn't stop anything from happening, right? That doesn't actually fight the problem. So anyway, yeah, that's sort of some of the stuff. So I'll pause for a second. As you can see, I'll keep going further.
Is there any way that these funds can be meaningfully green, or is it just totally not in the equation?
I think the majority of them, it depends what you mean by green. If you mean green in that they own more green companies, in theory, they can do that. But I think that the public and anyone buying those products believes that they're creating some impact that would not have otherwise happened. Mm-hmm. And that they can't prove, right? What they can actually do is, I'll give you an analogy. If you go to the Middle East, you'll get a lot of the Islamic investors who care about whatever specific, based on ethics. Same with the Church of England and other ones. So they won't own certain things. So if you're an Islamic investor in the Middle East, you would not want to own, let's say, alcohol, right? So I've met clients who they don't want to own Diageo or whatever. None of them actually believe that by not owning it, they are actually going to stop alcohol from being, you know what I mean? They kind of know people are drinking a Bud during the Super Bowl and drinking wine in France. So they're just saying we don't want to partake in it. Effectively, most of the mechanisms that they're using, including the majority of them on the public markets, just move share ownership around. it has as much impact as that person not to own the alcohol thing, which is to say it has no impact. And really the only way that you actually create impact like that, it has to be through the government, right? It has to be that what the government did with COVID-19, right? They realized we got to bend down the curve, right? The COVID-19 infections curve. It's a systemic problem, so we can't just rely on the free market and people being responsible. They had to make masks mandatory. They had to close bars and high-risk venues, because if you just let everything open, right? Like the U.S. would have lost, unfortunately, millions of people, not just 500,000. And so that's the challenge, is that I saw inside the system, it was very clear when I was looking at data across the biggest asset manager in the world and looking at ESG stuff. And in my case, having been formerly an investor, right? So I spent most of my career as a hard-nosed investor, including like a hedge fund in Europe. And then on the other side, running the organization I now run, Roomie, which is an education technology nonprofit that is a passion project. I was looking at two bottom lines and realizing this doesn't work. And that's, the big challenge is that you really need a systemic solution that applies to everyone. And I think government does have the ability to bend down the greenhouse gas emissions curve. But right now we're not, because a lot of the narratives are saying that the market will figure it out itself. And I personally think that it's a good time for business leaders to stand up and say, listen, like, we can't solve this. We couldn't solve COVID on our own, right? We can't solve this on our own either. And in the same way that if I were playing a sport, I love playing soccer, I might sort of say at some point if the game is getting dirty, right? And people are playing, they're playing dirty and they're fouling people and they're doing it because it helps them win games, which is to say a lot of businesses are doing stuff and polluting because it's profitable. I would say on the soccer field, say, listen, like at some point we need a referee, like we clean up the game, because I play sportsmanlike and I want it to be about good quality game. I think it's incumbent on more and more business leaders to actually say, listen, we saw that we needed government for COVID, right? To hold down the curve and figure out a vaccine at the same time. Well, we clearly need government and systemic solutions to bend down the greenhouse gas emissions curve and then have the investment and the conditions for investment around finding technological solutions, whether carbon capture and other things, to make that happen. But that only happens if government takes a really substantive role and uses its extraordinary powers and its democratic legitimacy to do that. And, in order for that to happen, I do think that, business needs to stand up and say, listen, we need changes. And they don't have to be bad for business, but they can't be business as usual in 2021, given the climate threat.
So what do you see as some of the main changes that need to be made to kind of address climate change and possibly more pandemics in the future? Like, what does it look like?
There's a bunch of really good ideas out there. There's no shortage of great policy ideas. I'd say, I'll name a few in a second, but I'd say first and foremost, I think that the thing that needs to be fixed is a narrative. Mm-hmm. The narrative basically seems to have been, in some form, have survived since the 1980s, that like free markets solve all problems. I think it's ludicrous. I mean, I'm a former investment banker, I have an MBA, I'm a capitalist, but all markets need rules. Like there's no such thing as a market without rules. All markets have rules, just like there's no competitive sport without rules. And I think that those rules need to be fixed and updated for 2021 in order to preserve the public interest. And I do think that narrative is really important, because a lot of prominent business leaders, including BlackRock's own CEO, as recently as, who I know, obviously, and I publicly disagree with him on this point, is that he said 2 months ago that, I prefer capitalists self-regulate. And I went, hold on a second, I'm a capitalist, but like even Adam Smith and Milton Friedman understood you need government and, referees and rules for any competition. And so number one, I do think that the most important thing is to shift that narrative, because you can't enact government policy unless you agree that government's the answer. It's kind of like, arguing about what we're going to put in the glove box. Once we buy a car, we don't even decide to go get a car in the first place. So I would say that when we get to policy considerations, there's a number that experts have talked about. William Nordhaus, who was won the Nobel Prize in economics in 2018, for his work in climate economics, he'd been talking about a price on carbon since the 20th century, right? And that's definitely an important one. And I think that it's not just important to say yes, because now everyone's saying, okay, we need a carbon tax, but now it's really important the details, because what I fear is that there's a lot of business lobbies that, are not I don't think they're pro-business. They say they're pro-business, and I look at everything they're doing, and I say, no. You're pro-short-term business, right? The Business Roundtable saying that the free market or whatever, basically stakeholder capital is the answer. To me, they're not serving the interests of a 22-year-old at BlackRock, right? They're serving, it's very, very short-term oriented because they know that currently the incentives of the system in terms of CEO tenure and pay, they've gotten so short-term oriented that the reality is CEOs making non-binding commitments to be net zero in 2050 is completely meaningless, right? Because Larry Fink's talking about and internally, even there's debate about this because what's the point of talking about 2050, right? Larry's gonna be 100 years old, right? On some level, I think that the business lobbies have an important role to play. And I think that they have to represent the interest. First of all, I have to remember that business and markets serve society, not the other way around. And number two, they have to represent the interests of all their constituents. And I do think people working in any big company in their 20s today are not being served by continued inaction, climate change. But then I'd say within the certain policies, Nordhaus pointed around the price on carbon, definitely, and it has to be thought out carefully because otherwise you get a weak one that's got all these exemptions and whatever, doesn't really do anything. So it needs to be robust. And I think you need other things that are regulatory driven, like auto emissions limits, right, for vehicles. If they start setting those, California's done it, a bunch of places done it. I have no doubt that the ingenuity of the capitalist system will work, and car companies are going to figure out how to meet those, right, because they have to. But if they're not given that incentive, it's just sort of asking people not to pollute. Well, I mean, obviously it's cheaper to burn fossil fuels. We built a $5 trillion global energy system based around that, right? So they're going to keep doing what they're doing. And I think, anyway, I think it has to be real systemic, real changes to the type we saw for COVID.
Do you think the way that the conversation around climate change during the pandemic, the way the conversation changed can lead to any concrete action or policy change?
I honestly do believe that the wake of COVID is the best time to drive significant policy action because the reality is that I think a lot of what I was doing, and I cast, I don't disparage anyone at BlackRock because there's a lot of great people doing a lot of great work and they believe it's helping. I think they're wrong. I mean, but I don't disparage them because I was in the machine and went there because I believed it worked and then started to realize over time, particularly after I left, that it was actually damaging. And so, I think, sorry, what was the original question? I went off tangent a second.
The conversation around climate change is changed during the pandemic. Do you think it can lead to meaningful action? Or
I think, sorry, I lost my train of thought there.
No problem.
The ideal thing is that because now you have this public awareness around the dangers of not listening to science, right? And this was what I was talking about, doing what I was doing really, which I think at a systemic level, I was contributing to something that was just an illusion or a fantasy. And what I call answering an inconvenient truth with a convenient fantasy, right? Because the inconvenient truth would be, it's going to cost us money and it's going to feel like chemotherapy, but climate change is like a slow-growing cancer. We just have to do it. And that we answered it with don't worry, you don't need the price on carbon. You can buy a low carbon ETF and make money and fight climate change at the same time. This win-win fantasy doesn't really make any sense. I think that those are going to disappear for a period of time, right? Because the public is going to realize that we can't answer an inconvenient truth that science tells us with a set of convenient fantasies that are kind of allow us to maintain the status quo. Because the truth is, imagine you didn't know if you got COVID for decades. It takes climate change, the bars would be open and I'd probably be at one myself, But the reality is you don't have a choice if it takes a few weeks, right? If your incubation period is 2 weeks. For climate change, 2 decades. And that I think has allowed a set of fantasies that just maintain the status quo. And I think that the moment for change, a real meaningful change, is actually going to be this year. Because the memories of the fallacy of not listening to science are so fresh in the minds of the public that I think that people realize that if we had to do that to bend down the COVID curve, flatten the curve, then we're going to have to do similar types of, government-led actions to bend down the greenhouse gas emissions curve. And so my sense is that actually now is a very good time to do it. I think some people will try to delay and say, oh, it's too hard in the wake of COVID. And I would actually argue the exact opposite. And now is exactly the time when there's an opportunity to build a bit of a political consensus around doing this. And I think that business has to business also has to be part of it. It's the majority of the capital and the jobs are in the private sector. But I think that business has to have its own debate with itself about how that's going to come about. And I think it's particularly younger people in business who see that kicking the can down the road is not a realistic solution. It's just going to end up, we all know prevention is an ounce of prevention is worth a pound of cure. I think it's those really younger business leaders who I think can be leaders in the debate around saying that, listen, we need to think at a systemic level about how we get to the next, get to the end of the century.
Yeah. Bringing it back to your career, how did you transition from your career in finance to building Roomie?
It was really interesting for me. I had graduated from undergrad. I'm originally from Toronto, but I went to school in the States and then spent most of my working career there. And so I kind of fell into finance by accident, which is, to be honest, what happens to a lot of people. Like I wanted to win some big scholarship, and at the end of undergrad, I missed it in the final round. And then the banks come to campus and they hoover up people who, seem like they could be good at it and don't really know what else to do. And so I ended up in it for years. I did distressed debt investing, which is a very sharp elbowed, sort of aggressive corporate rater style investing, which is a really interesting learning experience on how things work. And then, for me, Roomie came because I just realized I wasn't really doing what I wanted to do long term. And I had gone to get an MBA just over a decade ago. And my roommate in business school, who became one of my best friends, he's working in banking, he was in Merrill Lynch. And he said, listen, we both wanted to do something meaningful. The whole thing about purpose, right? We said, look, we want to actually do something that's meaningful. We're both working in finance. Mm-hmm. So we graduated and we were like, we're going to do something good for the world. And we both went back to finance. Because it's really hard to find some imagination around doing stuff. And so he was one of my best friends. We were roommates in the program and everything. And then in 2010, he contracted cancer, and it moved really quickly, and then suddenly he had stage 4 melanoma. And stage 4 melanoma, at that point, it's a shock because we were the exact same age and everything else, best friends. And so suddenly it's like, stage 4 melanoma, basically, it's not even a question of chances, it's a question of time. And so he was a blonde-haired, blue-eyed guy from Holland who, wanted to do something meaningful. And, he decided he wanted to build a charity in Kenya. And it turns out my parents were born and raised in Kenya, my grandparents for generations. And so, remember, we're talking about work together. We actually founded an organization that uses play for education in Kenya, and now this is part of Uganda. And it is really inspiring for me because if you have a very close friend and they go through something and you see every stage of it, you kind of live it vicariously through them. Mm-hmm. And so having seen him do that, and we both talked about it, and then as soon as he realized, he couldn't just be like, someday I'll do it, it's like now or never, because he knew that there was limited time. He went and did it, and having seen him do it, I had the idea for Roomie, and it was based on actually some investments I'd done years earlier around bringing mobile phones into places like Kenya and other countries as a leapfrog over the lack of landlines. And Roomie is pretty much a similar idea, but it's for learning and education. It's that the least connected people in the world, whether they're, or least served, whether they're, we're doing a lot of programs in Detroit now, right? And there's a lot of underserved communities, right? And it is that they are the ones who could gain the most from the free digital learning revolution, but they're usually the least likely to access it. And so at Roomie, we're bridging that gap by making, learning free, easy, fun. And so anyway, that was the genesis of Roomie. And so I built it. We've done a bunch of cool things. We're doing it in refugee camps and for girls' education in parts of the world. And so we reached from Harvard Business School, started teaching a case study on it in 2016 and whatever, really fast. And that's actually how BlackRock approached me, because they're like, oh, you've kind of worked on both ends of it, right? You're like a rapacious capitalist who's, spent most of my time doing that, then built from the ground up this tech org. And which made sense because I had originally done a bunch of programming stuff also as undergrad. And I worked jobs in it primarily. And then I started out as a banker in the tech sector. So I actually started my career in the Silicon Valley at Credit Suisse, First Boston's tech banking group, which was really a bunch of tech people who then they taught finance so that they could understand the clients. And so anyway, it all ducked out really well. And that's how I ended up doing Roomie.
What was the moment you decided to leave BlackRock?
It was mainly linked to the family thing, right? Which is that my father-in-law passed and they had some family business stuff. and there was no succession plan, right, for a lot of organizations like that. And I've been helping with stuff on the side, and he really just wanted me to take it over. And then like the family business is a lot of trust, and there's all these jockeying interests. And it wasn't a huge company, but it was meaningful for a lot of family members. And like I was the one that everyone said to focus on doing. So that was the time I left. It was right after I said, look, I have to go focus on this. And then I transitioned out over a 6-month period to make it, so I didn't jolt everything we were doing. But that was really the main reason. I, of course, had started to realize that there was not a lot of impact out of it. But I didn't think it was that big a deal until after I left. Because at the beginning, I thought it was wheatgrass to a cancer patient. And I was like, well, it's kind of harmless, but like, it's hard to make the argument that green finance is negative, right? Even if it doesn't help as much as you thought, like you'd be like, oh, okay, well, maybe it's doing something. But it was only after that I started realizing it was a placebo, and then I worked with a university here. We did a study that we'll release sort of next month, and we actually showed people headlines, and we found that in the US, like if you start showing them messaging around like green finance and business will do all this stuff all by themselves, stakeholder capitalism, and it's just like, it creates the impression of people that they don't need government action. Mm-hmm. Because they say, oh, well, why would we change anything, right? Because it's like, they've got this, right? And then I was sitting in the middle of the machine, and I'm like, I definitely don't have this, because I'm seeing the biggest asset manager allocating capital, and I'm like, it's clear that, frankly, being responsible is not as profitable as advertised. And the only way that we change that is that business actually goes to the underlying activities companies are doing. And they adjust it, right? If you're emitting greenhouse gases, you got to pay the cost of that, right? And then suddenly that business model is a lot less profitable. And then Wall Street, you don't even need to tell them, like they're going to react, right? They're going to chase profitability and yield wherever it goes because it's what they're trained to do.
What do you think is the biggest damaging impact of greenwashing that people might not know about?
I think there's a small problem is that I think it's not fair and misleading to get people to buy a bunch of financial products in particular, or products of any type that they believe is creating some impact in the world that's not actually happening, right? I think that that's fundamentally unethical. But I think the biggest concern is that at the aggregate level for society and the public, it creates a placebo effect that delays action. Right. And if, it's, fast action on COVID, we know now there's studies that show that like, if you acted quickly, you could prevent it from raging out of control. Because once they're raging out of control, it's very hard to control. And there's countries that did a great job with that. And, and I think that that's the biggest lesson. We need to act quickly on climate, and anything that creates a placebo, we need to have a real debate about it because we may end up deeply regretting it.
What lessons have you learned that you're now applying with Roomie through working with BlackRock and everything else you've spoken about?
I think with Roomie, actually, probably it's the importance of communicating these messages to people, right? Because Roomie's an education player. We've learned very quickly. We're very business backed, right? That's why the biggest backers of it were companies and other things in the early days, and then I went BCG to this and Harvard Business School, whatever. And so I'd say for what I learned from Roomie was that like it's an education play, right? And so we started switching to micro learning. If you go to Roomie.org, you'll see it's all mobile first and short engagement, because we realized that if you want to reach youth, you have to reach them how they use technology, which is like mobile first and short snippets of time. The social media companies figured that out. That's why they make, you get a dopamine rush for a 5-minute hit, because they know that, you'll use it while you're waiting for the bus, while you're 5 minutes for a meeting. Like they just hack those boredom times. And so what I learned from Roomie was the importance of like figuring out how to communicate the message to people, because that's really how you teach, right? Is that the quality of your message is what helps people understand. And that's what I learned for this, to be honest. With BlackRock and everything else is that really the communication to the public around what the problem is and what needs to be done is critically important. Otherwise, you don't really get the political consensus and movement for systemic change.
What is the best and worst piece of business advice you've ever received?
I just realized, by the way, I got to hop in a second, and not to be remiss.
No. This is my last question. So
the best piece of business advice, unrelated to anything I've just said, probably has been to realize that anything that seems simple from a distance is always infinitely more complex. Mm-hmm. This is just something I learned out of doing entrepreneurship and starting my own thing, was that, the reality is that number one, 10% of what you do is going to drive 90% of the outcomes. So you have to be very, very careful. Let's figure out what those levers are. and often you don't have the data to know. And so it's a lot of intuition and early stuff. And the second piece around that is I think, just the importance of well, I'd say really that it's around prioritizing and really understanding where to focus your time. Probably I'd say is the one thing that sounds like a really simple lesson, but I just feel like people always get bogged down in stuff that's not actually driving the outcomes they want to create.
Definitely. And the worst piece of advice?
To just follow your passion alone. I don't think that's good advice. I think you have to follow your passion where it aligns with your skills. And, otherwise I'd be trying out for Manchester United and failing. But I realized that my skills weren't there. So the best piece of business I'd say, like, you find that intersection, and that's really where people find fulfilling work.
That's great advice. Do you have any parting words, parting anecdotes, or advice?
Not really, beyond the fact that I really want business to start a debate on this and figure out how we can be part of the solution rather than holding up the solution for society.
Definitely.